It's the most powerful force in the global economy. It's in your wallet, your bank account, the very bedrock of modern prosperity. The US dollar. For decades, it has been the undisputed king of currencies, a symbol of American might. But what if this symbol of stability has become the world's most dangerous time bomb? This isn't a story of conspiracy, but of consequence. A tale of how a simple agreement 80 years ago set a fuse that is now burning dangerously short. The clock is ticking. In July 1944, as World War II raged, the world's financial leaders gathered at a secluded hotel in Bretton Woods, New Hampshire. Their mission? To design a new global economic order. The result was the Bretton Woods Agreement. The US dollar, backed by the world's largest gold reserves, was crowned the global reserve currency. Other currencies were pegged to the dollar, which was itself pegged to gold at $35 an ounce. America, unscathed and powerful, became the anchor of the entire system. The debt empire had its foundation. This new role granted America an exorbitant privilege. Unlike any other nation, the US could pay its international bills in its own currency. It could finance wars, buy oil, and import consumer goods simply by printing more dollars. The whole world needed dollars for trade and as a safe haven asset, creating perpetual demand. This allowed the US to live beyond its means, building a mountain of debt while maintaining an illusion of limitless prosperity. The power to print seemed like a magic trick with no downside. The power to print money was a dangerous temptation. In the 1960s, President Lyndon B. Johnson's Great Society programs and the Vietnam War required massive spending. The US began printing more dollars than its gold reserves could back. Nations like France grew suspicious. President Charles de Gaulle famously sent the French Navy to physically reclaim gold from New York. The trust that underpinned the entire system was beginning to erode. The first crack in the empire's foundation had appeared. By 1971, the pressure was unsustainable. The U.S. gold reserves were draining rapidly. On August 15th, President Richard Nixon made a historic announcement that shattered the Bretton Woods system. He temporarily closed the gold window, permanently ending the convertibility of the dollar into gold. The dollar was now a pure fiat currency. Its value was no longer tied to a physical asset, but solely to faith in the U.S. government. The bomb's timer was officially activated. The system needed a new anchor. In a brilliant geopolitical move, the U.S. struck a deal with Saudi Arabia in the 1970s. The U.S. would provide military protection and weapons. In return, Saudi Arabia would only sell its oil in U.S. dollars. This petrodollar system forced every oil importing nation to stockpile dollars, reinvigorating global demand. The dollar had found a new lifeblood, black gold. The empire was saved, but its addiction to debt was now locked in. Freed from the golden shackles, the U.S. government and its citizens began borrowing and spending with unprecedented fervor. Tax cuts, increased military spending, and growing social programs were no longer constrained by the need for fiscal discipline. The national debt, which had taken over 200 years to reach its first $1 trillion, began to explode. The debt spiral had begun, a vortex of borrowing that would only grow stronger. The culture of consumption became America's new religion. Buy now, pay later was the mantra. Easy credit, subprime mortgages, and a booming housing market created a false sense of wealth. The entire economy was shifting from production to financialization. America wasn't just building things anymore. It was building debt, packaged into complex instruments and sold around the world. The foundation was turning to sand. The debt monster reached its climax in 2008. The housing bubble, built on a mountain of subprime debt and complex derivatives, finally burst. The very financial institutions that created the crisis were deemed too big to fail. The government responded with the largest bailout in history, trillions of dollars, effectively socializing the losses. The debt didn't vanish. It was transferred from Wall Street to the U.S. taxpayer. The bomb's fuse burned shorter. With traditional tools exhausted, the Federal Reserve turned to a radical solution: quantitative easing. In simple terms, it created new digital money out of thin air to buy government bonds and flood the markets with liquidity. It was a massive, multi-trillion-dollar experiment. It stabilized the system in the short term, but poured gasoline on the fire of wealth inequality and inflated asset bubbles everywhere. The solution was more of the poison. The numbers are now staggering. The U.S. national debt has surpassed $31 trillion. It is a mountain so vast it becomes abstract. Incomprehensible. To pay it down would require unthinkable tax hikes or brutal spending cuts. Politically, Both are impossible. So, the debt keeps growing, fueled by perpetual deficit spending. We are no longer just kicking the can down the road, we are launching it into orbit. The real time bomb within the bomb is the interest. As the debt grows and interest rates rise, the cost to simply service the debt, to pay the interest, not the principal, is exploding. This money isn't building roads, funding schools, or defending the nation. It's a massive transfer of wealth from taxpayers to bondholders. Soon, it could become the largest single expense in the federal budget, crowding out everything else. For decades, there was no alternative to the dollar, but now rivals are emerging. China, seeking to challenge American hegemony, is aggressively internationalizing its currency. The yuan, it's establishing swap lines and convincing trading partners to settle in yuan. While not an immediate threat, it represents a fundamental shift. The world is slowly, cautiously preparing for a post-dollar era. The monopoly is ending. From the digital frontier, a more radical challenge has emerged. Bitcoin and cryptocurrencies represent a paradigm shift, a decentralized, borderless, and limited supply form of money, fundamentally opposed to the endless printing of fiat currencies. They are a bet against the entire system of central bank control. While volatile, they represent a growing global sentiment, a search for a hard, predictable money outside state control. America's greatest financial tool has become a weapon. Through sanctions and cutting off countries from the dollar-based SWIFT payment system, the U.S. has shown its willingness to use the dollar as a tool of foreign policy. This has a dangerous side effect. It forces sanctioned nations like Russia and China to build alternative financial systems, accelerating the de-dollarization they already desire. Every sanction is a blow to the dollar's invincibility. The bill for decades of easy money is finally coming due. The massive stimulus during the COVID-19 pandemic, on top of existing debt, supercharged inflation. Prices for food, energy, and housing are soaring. The Federal Reserve is now trapped. To fight inflation, it must raise interest rates, which dramatically increases the cost of servicing the national debt and risks triggering a deep recession. There is no painless way out. The ultimate foundation of a fiat currency is trust. Trust that the government is fiscally responsible. Trust that the currency will retain its value. That trust is now fraying. Political polarization, endless debt ceiling debates, and the weaponization of finance are causing allies and adversaries alike to question the dollar's long-term stability. Once faith is lost, it is almost impossible to regain. Where does this lead? Several painful scenarios are possible. A period of stagflation, stagnant growth with high inflation, a deep debt-fueled recession, a dramatic devaluation of the dollar, destroying savings, or a moment of fiscal reckoning where the government is forced into austerity. Slashing services citizens depend on all paths involve significant economic pain. The choices made today will determine the severity of the explosion. Is it too late? Averting disaster would require a Herculean effort, a political consensus for fiscal responsibility, a multi-decade plan to curb spending and increase revenue, and a commitment to rebuilding the industrial base. It would require sacrificing short-term comfort for long-term survival. It's a bitter pill that a divided nation may be unwilling to swallow. The window for a soft landing is closing fast. The debt empire was built on a foundation of privilege and power. But that foundation is now cracking under the weight of its own ambition. The US dollar, once the engine of global prosperity, has become a ticking time bomb. Not through malice, but through unsustainable addiction, the fuse is lit. The countdown has begun. The question is no longer if the system will change, but how it will change and whether we will be the architects of a new future or the victims of a collapsing past. The next move is ours.